where they say, oh, you need to be in business for 3 years in order for you to get approved for vehicles and cars and business bank loans. And there's some truth to that, but they're spinning it. And I think it's because of lack of information. Now, the thing with full doc loans is these are the big boy loans. These are the big girl loans where you can get up to $1 million, $2 million, $3 million plus, right? But for stuff like this, they do want to see 2 years of tax returns. They do want to see your bank statements, profit and loss statements, all of the paperwork, right? And so if you're on this call, this may not necessarily be the best option for us. So let's move into the next tier. We have partial to low doc loans. Now we start getting a bit more flexible, right? 1 year tax returns. I'm sure a couple of us have been in business for at least a year. If you have, and if you've been keeping some really good bookkeeping, then odds are this may be a better look for you. Bank statements, W-2, pay stubs. Now they may ask for a profit and loss statement because now we're starting to get a bit more partial and low doc loans. But we can maybe do a little bit better than this, especially if we are brand spanking new. And by brand spanking new, I mean less than a year, right? No doc loans. Now, no doc loans allows you to go off of stated income, which is what you're putting on applications. Remember, don't lie. Actually put the stated income, right? You can use your personal income and your business income because it's going to ask for both on the application. Some of them put projected revenue. So you want to make sure that you watch the wording on some of their applications. Now, for those of us that are maybe filling out no doc loans with a projected revenue on it, and maybe you're a newer business, you have no tax returns, you have nothing to show for your business of income that's actually coming in, right? What you can do for projected revenue is you can see and take a look at, okay, I'm in the lawn care business. And so I'm going to do my homework as a business owner. What does the average lawn care business owner make within the first, from year 1 to year 3, right? For my demographic, for my zip code, for my area. And so you want to make sure that it makes sense to the bank, because they're also going to take a look at where your business is located due to the, again, zip code of where your brick and mortar or where your virtual office is. I'm showing you guys how to think like what the bank is looking for. So that way it facilitates the process. So when you go in and you start asking them for money and we start asking them to pretty much start a relationship with you, they actually want to start a relationship with you. And so I'm going to take a look at, okay, this is the average more so for the projected revenue in this side of town. So I may want to, I'm projecting, I may make $85,000, right? If it's between 65 to 110, you may want to put yourself in the middle, but I'm definitely not going to use Orange County numbers, right? Remember, we're only doing this for projected revenue because these are projections. We're not doing this for stated income. They are going to personally guarantee, which is essentially what's going to help you get this loan. Because remember, no doc loans are more for starter businesses. The most that they loan, the most that they lend up to is up to $100,000. Once you pass that $100,000 threshold, you now start going into partial docs. And then once you move beyond that 500 to $1 million, that's when you start going into full doc programs, right? Now, the cool thing about this, it's not going to require you any bank statements, W-2s, or tax documents. Again, this is, in my opinion, the best option if you're looking to take the loan route when it comes to getting business funding, again, through the no doc loan route. But make sure that your business credit is with the data points that we just gave you. And then you can always set up the relationship with them and then go back and potentially, obviously, get approved for this type of funding, this type of product. Now, this is what I call the high approval secret weapon. This is what the banks don't tell you. This is what I'm gonna tell you. This is what's really going to help you catapult not just the amount of funding that you get, but also the relationship of what they want to see on your application, because you're going to get it directly from the source. Here's what I mean. So you want to obviously have relationships, and you want to make your file you want to create fundability, right? You want to be fundable, right? So apart from having our business set up correctly, the right name, the right address, the right articles of organization, that's what AOG stands for. Your SIC codes, you want to make sure that they're at low risk. Your NAICS codes, you want to make sure that they're at low risk. I'm sure that Rad has covered that. If he hasn't, I'll give you an example. Because I had this with the client, he was having a really hard time getting approved because he runs a trucking company. But we're not going to say that, oh, just switch it over to something that you don't do just because it's going to be low risk. No. So you want to be strategic. And so you think, okay, according to the NAICS codes that I have, that I can use legally, what's something that's maybe seen as a lower risk? So we figured out logistics, which is still in line. We're still being ethical. Logistics is still in line with trucking. So the minute that he switched it over to logistics, you got the new NAICS code, boom, the gates opened up for him just off that small tweak. For those of us that are in real estate developers, real estate investors, that is one of the highest, what I say, the highest risk codes that you can think of is going to be real estate developers, real estate land developers, and investors. I believe there's about 32, maybe 33 different codes inside of the real estate NAICS code bracket. Instead of putting on the application that you're a real estate developer, because that was the code that you were getting, and that's a business that is just runs rampant when it comes to defaults, why don't you put it as real estate management? Because you do run a management service, don't you? Yes, I do. You also happen to have some properties that he was renting out. So again, switching that over to real estate management, boom, the low risk came down. Now we start seeing the floodgates open up with real estate funding. Business checking accounts, which is going to help you build up your bank trust and your bank rating. If you guys have no idea what the bank rating is, you're going to get a score from a 3 to a 5. I would like to see you guys in the low 5 range. Low 5 means that you have at least $10,000 in your business checking account, right? And then you want to make sure that that doesn't fall into a negative, and that doesn't fall below $5,000 in a 90-day period, because that's going to generate on the internal side, especially for those of us, again, going back to Rad, because I know what he gives you guys. Going back, this is similar to the 91.3 rule that happens with Navy Federal, where you guys are using some of these pledge loans to, again, kind of hedge your way into building that relationship. We're just doing it on the business side. And then the biggest piece, well, it's all important, but the biggest piece that I would say that a lot of people kind of just run right past, they have no idea about, is relationship managers. Relationship managers is the gateway, the key, the holy grail to you getting access to a higher limit and to you knowing why they may not want to do business with you at this time, right? So I always tell our clients, when you walk in to a credit union, to a local bank, ask them, hey, is your relationship manager here? I like to speak to your relationship manager. The key to this is let them know that you're going to be making a handsome deposit that day. That's your script. Yes, why would you like to speak to our relationship manager? Well, I'm actually going to make a deposit. I want to open up. I have a business that I'm running, and I want to open up an account with you guys. I'm going to be making, I'll give you an example, right? I'm going to be making a $35,000 deposit into my business checking account. Guess what's going to happen? They're going to see you a little bit differently from someone that's just coming in, opening up a regular mom and pop college account, right? Because they're saying, wait a minute, this person's actually putting funds into this account on the business side. This is going to work far better than doing this with maybe a Bank of America, or doing this with a Chase, or doing this even a Wells Fargo, right? The reason for that is because Wells Fargo, Chase, Bank of America, even though those are tier A banks, those are tier 1 banks, they're used to working with whales. They're used to working with hedge funds. And so $35,000 to them, it's like, yeah, that doesn't even cover our payroll for the week. You know what I mean? But to a credit union or to a regional bank specific in your area, to them, it's like, this is good. This is exactly the type of clientele that we want in here. Yes, how can we help you? And so the relationship manager is going to help underwrite some of your files. They're going to manually help you see what the underwriters want to look for. If you are denied, you already had that relationship. Hey, why was I denied? What happened? What do they want to see? Well, hey, Irv, you've only been banking with us for like 2 months, maybe 60 days, whatever their guidelines are, right? An extra 60 days before you apply again? Oh, 100%. Do you want me to keep making deposits into this account? 100%. Absolutely. That relationship speaks further than you just being a number to some of these banks. I hope you guys caught that, because that's going to, that piece right there that I just gave you is what a lot of people hold close to their chest from funding companies that are going to charge you an arm and a leg, to some of these other companies that they just don't want to give up that information. I just gave it to you guys because I hope that it brings value to this community. And I know what Rad is pouring into you guys. And so if you guys can run with like these last couple pieces, it's going to just completely catapult your business. How would I prioritize the banks that I go to? And this is exactly what I told my clients 2 weeks ago. The banks that I would go to would be those that I've already built a relationship with. So those will be the most effective. So if maybe you already have a personal credit card, you've been a bank with maybe PNC. This is why I never knock anyone for saying, well, let me at least start off with a personal card. And I still recommend get yourself a personal card, because that could be the bridge for future funding for your business 6 months down the line, 1 year down the line, or even 90 days down the line, right? Getting into their ecosystem, especially with American Express and Navy Federal. So you want to start off first with the banks you have a relationship with. Next, I would recommend you want to use banks that issue out their own cards, preferably 0% business cards, and no doc loan products, or low doc loan products if you already have, at least a year or two of tax returns, and you can actually show that, hey, my business is profitable. Like, we're pumping some pretty good cash flow. We just need some help in terms of funding. And so that's what I would take a look at. Banks that issue their own cards. Number 3 is going to be banks with business credit pre-approval offerings that they send you. So if maybe you got an email, or maybe if you got a letter saying, hey, we want to extend this offer to you. American Express does this quite a bit. Chase does this quite a bit. We want to extend this, 100,000 point offer to you at 0% interest for 12 months, for 15 months, whatever it is. Go ahead and just insert this code. That's going to be dramatically higher than you just trying to approve just by walking in to a bank and not having any of these steps in place. And then the 4th one that I would recommend for you guys to use, if you guys are prioritizing which banks to go after, it's the one with the most liquidity in the business account. What does that mean? That means if I have my main business account, I have 2 or 3 other, small business accounts that I'm nurturing my relationship with, but I have my main business account that's, we're bringing in 30,000 a month, 50,000 a month, 100,000 a month, 250 a month, like whatever your goal is. The one that's driving in the most liquidity, that one probably is the most seasoned. And so that's the one that I would also consider taking a look at, but I would maybe leave them at the bottom, because the one that you have the most relationship with may not necessarily be the one that you're running the most liquidity through.